Hello, 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 everyone. Happy CPI Thursday. We'll bring Bob on really quick. If you're new here, please do. Just subscribe and hit the like button. There we go. Let's get some stuff out of the way. Good morning, George, Patrick, Jacob, Coco, Christoph. Inflation's gone, huh? Good morning, Anissa. So we'll get to those numbers in a second, but the market up strong. Just before we get to that, reminder secondary to the inflation print, we did have some earnings out this morning, but not much going on. And after, again, we still have earnings, but not anything substantially market moving and not even some major players. So just wanted to get that out of the way before we bring on, we'll just do it right now. We'll bring on the Bob. Hey, Bob.
Yo,
Yeah,
you
we're
guys hear
here.
me? How right was I? I don't really care. Um, so let's get right into CPI. You guys asked me if I thought it was going to be a miss. I thought it was going to be a miss. I didn't expect markets to respond this insanely because, again, we're talking about now. Do you have the probabilities up, Mike? I haven't looked at them yet. It's got to be like 75% probability of
80% for the 50 basis point.
for the 50s. So again, we're going like twice what a normal rate hike or rate cut is in a regular cycle is like reason to rally 4% in the NASDAQ, which is fine. I completely understand that. And, you know, how long have I been saying that I thought the fourth quarter was going to be positive? So now we shift. And part of the reason I said that I thought this number was secondary now is because people will take the headline number as a really big deal and a really big improvement. And it's really not because we're starting to see base effects come into the year over year number. And that's why I said stop looking at year over year now. It doesn't matter as much. The month over month number is what we're rallying on. So the last couple of month over month numbers beat expectations to the upside. This is the first one, and I want to say 5 or 6 prints. Don't quote me on that, but around 5 or 6 prints um, that underperformed. Coco said Fed pivot is now guaranteed. You know, it's like living in Chicago and saying snow is guaranteed every single day, and then thinking you're right when there's snow. Of course, there's going to be a Fed stoppage. It's not going to be a pivot, but there's going to be a Fed pause. We were not going to raise rates at 75 basis points per clip into infinity. That was never going to happen. If you guys go back 2, 3 months ago, you'll hear me say that I thought it was going to be 75, 50, 25. I'm not saying that because somebody came in here one day and said Bob likes to be right. Of course I like to be right because then my trades are right. But that's not why I said it. The reason I said it is the Fed specifically said they want to see evidence of slowing inflation before they pull back. This is evidence, one number. It's only one number, but it's some evidence of slowing inflation. Now we get one more CPI and one more PCE deflator before the next Fed meeting. Well, let's not all get too comfortable, especially with gas prices rising again. And with these kinds of numbers, I haven't looked because I haven't opened up my platform yet, but I assume copper's higher. I assume crude is higher. Again, I haven't looked yet.
Yeah,
Um,
copper was higher today, about to trigger close to triggering a double bottom, close to confirming and triggering gold off the little double bottom, hit the all the targets. So yeah, it's up substantially. So you have that,
I'm
and you have
opening
oil. Let me just oil is
30%, no big
eh.
deal. I just
So
opened up my platform now. Silver up 2%, copper up 2.8%. So all of these rallies feed a little bit more into inflation. So let's not get too comfortable. Also, the most reliable indicator that nobody looks at of a recession, continuing jobless claims, continues to get worse. So we are going to start to see the conversation of a Fed slowdown. And all the people who've been saying the Fed is going to pivot, the Fed is going to pivot since September are finally going to be right. And they're going to be saying, like Coco, I told you so. But it's not a pivot. I mean, we don't even have 100% probability of 50 yet. And I suspect that's because we have two more inflation numbers. So 50 basis point rate hike is not a pivot.
No, it's a change of pace.
Yeah. So
We've
Coco
talked
says
about this.
pivot is now guaranteed. A pivot was always guaranteed. If you call a pivot a succession of rate hikes, that was always guaranteed. That's not what a pivot is. So yields responded aggressively on this. I mean, friggin' aggressively. They were slightly higher. And last I looked, the 10 years below 4% again. So this is expected. Dow's up, what, 800 points now? I mean, this is expected. I've got the 10-year at 392 right now on the yield. Yesterday's settlement on the 10-year yield, 412. That's a huge move. Huge move for less than 24 hours.
Yep.
So European Central Bank also said, one of the members, I'm not sure who, I'll find out later, said that peak inflation is almost within reach. So we're starting to get all these central banks now slowly starting to talk about enough with the front loading, even though the ECB barely started. So this is all good news for the equity markets, good news for my long position in the S&P. It's all good news. This is a good number. This is a positive number. You will not get me to back off, though, on first and second quarter being bad, because now it's recession. Now we start looking at a recession as opposed to how bad inflation is going to get. And also, keep in mind, before I go to any questions, year-over-year inflation, 7%. Month-over-month core, up 0.3%, not down. Down from expectations, down from last month. But there's 0.3% more core inflation than there was last month. So we're not getting price drops here, like everybody's going to say. Prices are
Yeah,
not going down.
that's already what I heard from people this morning. A, I got bombarded with the pivot thing. B, I got soft landing, new highs by the end of the year, and C, prices are dropping. I said prices
So
are not dropping. We still had month over month up. You'd have to have that be.
prices are rising more slowly.
Yes, but people that no, there and I got the big argument. No, it came in inflation rate year over year 7.7%. See, prices are dropping. I said no. It's just you can't deal. I can't deal with absurdity anymore. I mean,
You can't help ignorance, and you can't coach the stupidity out of stupidity. You just can't.
no,
Nothing you can do. And the funny thing about it is, like, it doesn't really matter. None of this really matters. Like, Mike doesn't have any positions on based on whether inflation is going up or down. None of it
no.
matters. There's
That's
people
what's
who can't
funny.
trade next to Mike, and they will never be able to. Go see you were wrong. Yeah, whatever. I'm wrong. I don't care. I'm taking profits on this trade. It doesn't matter. It's so stupid.
No, I lay out stuff just like on this. We still had the longer term bullish. I laid out exactly what was required to invalidate the pattern and to stop it out. Did not hit it. So the bullish
So
pattern
here
is
we
still
go.
in place.
The last thing I want to point out before you see if there's any questions for me, Mike. Today we've got Waller, Christopher Waller, Patrick Harker. We've got Lori Logan. We've got Loretta Mester. We've got Esther George. We've got John Williams. Waller's already spoken once, and he said we need to be vigilant against inflation. He's speaking again this afternoon. So watch that Fed speak. Watch what they do. So
Hey Coco, we're not even at pause level yet.
yeah, he's a knucklehead.
We're not even discussing a pause in December.
You know how you can adjust the bit rates of things so that, like, let's say a YouTube channel, you can make the person talk faster or slower?
Yeah.
Okay, so imagine if you're watching a YouTube video and your significant other says, "Can you pause that for a second? I need to talk to you." And you just slow it down. The person would be like, "I said pause it." And then you slow it down even more. Why aren't you pausing it? Or if they said, "Can you rewind that? Can you pivot it to a few minutes earlier?" And all you do is slow the bit rate down. That's the idiocy of saying pivot and pause when all they're doing, just like inflation is not going down, it's rising slower. The Fed is not turning around to quantitative easing, they're just raising rates more slowly now.
That's what's absurd. And again,
Mhm.
print comes in better. Inflation's dropping. No, it's still going up month over month. It's and you have the huge base effect for year over year now.
Yeah.
By the way, for anybody wondering, because we do have major well, it's not really that major this month, but we do have options expiration next Friday. Uh, Gamma flip is 38.71 in the S&P. We're at 38.82, so we're now in positive gamma territory. Minorly, but there's no more with this rally this morning. You have now dealers on continued rally, especially substantially higher. You have them having to hedge by selling into the rally, so there's a dampening effect. Uh, let's see. Yeah, we got that crypto coming. The also you're getting a rip your face off rally in cryptos too, which is I think sort of funny this morning, especially since
Yeah.
the peg of Tether's been horribly unstable last night. Uh, it's very interesting. What the Fed whisper tweet? The October inflation report is likely to keep the Fed on track to approve a 50% basis point, which is what they've been discussing as an option. Uh, can you understand base effects for the ones that don't understand, Bob, real quick?
Yeah. So if 12, so year over year means 12 months ago, right? So remember, keep in mind, Mike, I don't know if you have time to put up that Fred CPI index, okay? But the CPI is an index, okay? And the year over year measures the rate of change from one place where the index was to a year later where it is now, okay? So when we have a steep inflation move, that year over year percentage goes up, all right? But then when we have a slight, what's the word? When it starts going up more slowly, okay, it starts to slowly measure the year over year change versus higher levels. So, in other words, the prior base of a year ago. So, inflation is still elevated. All right. If you look, so I did this study a while back.
Here's your Fred.
All right. So I did this study a while back for a TV spot. And what I told them was from 2016 to 2020, inflation rose about 12%. That's, I'm sorry, about a total of 12.1%. Don't quote me on that. And then in the next 9 months, it rose over 9%. That's that steep move right there at the end. Okay. Look how steep it is. Now, inflation is still going up, but it's going to flatten out a little bit, right? So now when you measure year over year, you're measuring versus a higher level. So the percentage is much lower, even though it's still increasing. Okay. Does that make sense? Mike, I don't know if I'm explaining that right, but
Yeah, and
if you
here's
just
the
go
one
to
year.
12 months, what's that?
Here's here's the 1 year. It's still
Yeah.
going up.
Yeah. It's still going up, but you're measuring it against a much higher level. So the percentage change looks less dramatic. It's not like when you have 8.4% inflation, right? And all of a sudden it drops to 7.7, that this index goes like this. It doesn't. It's just measuring it versus a higher level. So it shows that it's going up slower. That's what base effects are. Okay. Every month we put in a new base. I'm trying, I know I'm explaining this poorly. Every month we put in a new base for the CPI index. When that base is screaming higher, you get those high year over year numbers because these 8.4, these 9.1s, they were measuring almost just post pandemic, which the number had flattened out. So the numbers look dramatically higher, as did that steep little move that Mike just showed on the Fred chart. But then as it flattens out, the base effect, looking at the base of the prior 12 months, it's just, it already made it spike higher. So now the year over year looks a lot less strong. But as you saw from that CPI chart, CPI is always going up. On that chart Mike just showed, the big picture, there were only two drops. One was 2008 during the financial crisis, and the other was the pandemic.
Here was this was
That's the pandemic.
deflationary.
Yeah. That's deflation. That's deflation. These other moves where it flattens out, like just past that deflation area, Mike, that's
Yep.
disinflation, a little higher than that. So you see how it screams up, then it flattens. That's disinflation. So what we've got right now is disinflation, inflation that is rising more slowly,
Yep.
not deflation where prices are falling. Even that little hitch very recently is not deflation.
No.
You can see the numbers rising as Mike runs his mouse along it.
We technically had like 1 month where it from June to July it technically dropped. So you had one little deflationary print in a. It's just so funny. It, and I already said, people are looking for any reason. The bias is still up. People are looking for any reason to buy this market. Anything.
Look, we're basically done with earnings, and now the Fed is getting less aggressive. Of course, the speculative money is going to be long stocks, which is why I've said the entire time that I think the fourth quarter was going to be up. I didn't say how much. Earnings are over, and everyone understands what the Fed is doing now, and they accept it. So once you get all the speculative shakeouts out, and a lot of that could be, I don't see massive volume yet. It'd probably be a pretty good volume day. But a lot of that could be short covering. A decent amount of it is probably short covering in the futures markets. So, but then there'll be new longs. There'll be these idiots that texted Mike saying new highs by the end of the year.
Yeah, I get go all in. All in.
While Meta is laying off 11,000 people, we're going to get new highs by the end of the year. Now, that's good for the stock, obviously, but you're going to start to see unemployment creep up. And you're going to start to see more concrete evidence of the recession that we probably are already in.
And I've said before, I wouldn't be surprised, especially now this is out of the way. The next CPI number, we get out before the next Fed funds move. But before that, we got the Thanksgiving effect, which is naturally levitating up seasonally. I wouldn't be surprised over the next 2-3 weeks to reconnect with the 200. So yeah. There's long upside, but then that does not change anything long term to the downside. It's just another bear market rally. If something changes, we'll know. So let's see. I don't think we have time. I got to get through some levels, but Bob, can we look at under the hood at the CPI numbers? I believe it was mostly oil and used autos that lowered the number.
That was a big part. Services were still up. Service inflation was still up, and healthcare inflation was still up. Those are the sticky parts. I'm talking about service wages. So just real quick, and I'll let you go get to that stuff before the open mic. I just typed in base effects because Vertical is saying thank you, but I still think I explained it like shit. If you go to Investopedia, it says the base effect is the effect that choosing a different reference point for a comparison between two data points can have on the results of that comparison, which is a really elegant way of saying what I said because I suck at that. So, all right. Paul, I'm sorry I can't do that. I just, with the personal stuff going on, Mike's got to get to the other stuff. I'll probably have it for you Tuesday.
All right. Thank you. Thank you for coming on and helping us navigate through these wonderful disinflationary times.
See you later, guys.
See ya. All right. How is everyone doing? I got to adjust the. Ooh. Boy. Ooh. A little hot there. Let's get to some targets to the upside. All right, we took out Tuesday's high. I put on the little harmonics. We've already gone through 38.87. My next key level today is 39.08. Then 39.28 to the upside overall, in case you can't tune in every day. Next major key area on the bullish move, which this little 4-day pullback never stopped out. 39.81.29 to 25 to 39.85. Minor is just 40.34. Majors about 40.59. Closing in with that 200 area. We'll go over some more analysis after the close today. Cycles, remember, I'm going to be paying more attention. Weekly cycles at the topping area. Daily cycles still getting to that top. I said I'd get more to aggressively raise long stops once we have top, and a potential daily rollover. We're not there yet. So, stalled out just in front of the second double target yesterday, and we hit stop reduction from the down moves. The key support, oops. Now on the S&P coming in at about 38.60, 38.62 on any pullback, which is right around the high area, 38.67 from Tuesday. So pay attention on any pullbacks. That's a level I will be utilizing. NASDAQ real quick. Remember, we're still caught in a range. Never got the key close below these levels down here. Minor 11,380, and then next key level 11,450, which do not ignore this. We've already softened up the 50 a couple times. 11,500 is roughly around the 50, so 11,480 to 11,500 is key resistance. And that still does not take us above the end of October highs yet. And yes, the potential double bottom is still in play. Just getting through a couple other things real quick. Dow coming down, hitting the first and second targets before launch mode. 33,595 and 33,758 are the targets up. Key support coming in about 33,190 to 33,200. Notes confirmed but not yet triggered mini double bottom. Gonna be focusing on this first target area though, 113.16 or 17 and a half. Technically, we got the 50 just in the way right there. VIX coming down bigly, hitting the second target still, 22.12 to the downside. We should still see some more follow through unless we get a really weird reversal. I want to hit on the spiders and the Qs. Spiders looking to open up close to 388. 387.16 and 385.12 are the key supports. Major resistance today coming in at 389 and then 390.40. Above 390. Now watch. Remember, the key close area is roughly this 387. I can't see the exact number. It's right around 387.90 area. Why am I watching that? A close above that, we should then target. First will be 395.83, then 403.78. And if we reconnect with the futures on the 200 over the next few weeks, it would be a reconnection up in this area with the S&P with the 200, or the spiders with the 200. The Qs cluster 276.60 to 276.70 is the first target. Above that, the next target's not till about 279.40 area with the declining 50. Support coming in 274.50, 274.60, and then 272. Let me give you the number, 272.85. So those are your support levels and key target areas for that. Remember, we are trading above Tuesday's high. as we already talked about, so I can't take a lot of questions right now. Crude still closed. I'm still watching for a pullback in crude prices from the probabilities, and that's not new lows yet. That's the pullback to this 82, 85 area at least. We had, as I already mentioned, gold through the next target. Next target areas I outlined in the video 1750, 1751. Copper, which this can be applied. I'll probably put out a video if I have time today on copper, and this can be played with a stock ETF also, but very nearly confirming that right there for the double bottom. Bitcoin bounce back. Is this a buy? No, we still have a carnage coming from Bitcoin. I'm actually surprised the amount it rushed into it with the relief rally right there. Dollar index breaking down. Next target area for me 108.05 and then 107.47 area, which is also the lows back in mid-September. All right. Let's see. I see a lot of thanks here. Well, you can think whatever you want. Everybody's got their own opinion. I can only trade probabilities. That's where we... Yeah, I know you think of bottoms in, and you can think that. I don't have the probabilities yet for a bottom. And if we go into our session, remember, once the yield curve starts climbing, especially accelerating back towards zero, we generally get a substantially big sell-off in the equities. So we still have bullish patterns unfolding within a bearish pattern context. And to put this in overall, remember, a lot of people, not everybody, a lot of people said the bottom was in here. The bottom was in here. We're going to new highs. We're going to new highs. Well, this is not new highs yet. This would be, maybe the 4,100 area, 4,080 to reassess right there. Even on a stronger rally, 4,300, which is not anywhere new highs. The only thing that tips my probabilities is a weekly close above 43.70 at this point. And we are a way off from there. So, into the open, sorry. Let's just check after this rally. Going to be looking for a slight pause, but the tick should be very strong. Yep. Very strong tick level, so you know what I'm watching already. Today I might watch it a little higher, about 500 on the positive tick for the pullback for when we start getting a more shifting to substantial pausing area. With that, I will be back after the close. So everyone have a fantastic trading day. Thank you for tuning in. I shall talk to everyone later. Bye.